this is Evan here from the Trade Risk on Wednesday, May 12th, 2021. We are intraday right now, and this is our weekly swing trade ideas video, and we're going to change things up just a little bit in this week's edition. We've got a lot going on right now in markets. We've got volatility out there. We've got the VIX spiking. We've got selling pressure across the board. So I want to use this as sort of a hybrid kind of market pulse, market analysis with some trade ideas, kind of focus in on what sectors, what individual stocks are worth sort of paying attention to, and sort of look at how the market environment has impacted things over the past couple of days. So that's the slight change up, but we're still going to look at a handful of different tickers and some different sectors. So hopefully we can make this worth your while and give you some ideas to think about throughout this volatility. As always, these videos are sponsored by our good partners over at Investors Business Daily. We've got links in the description of this video to check out their stock lists. That's where we curate a lot of our ideas. A lot of our trades come from IBD's stock lists, which are pre-vetted and sort of pre-analyzed for leadership, growth, strong fundamentals, all the good criteria that they've been doing for decades. So check them out with a link in the description of this video. So we're going to start things off with the Qs here. So the Qs, if you've been following along with our market analysis video, especially last Friday, we certainly highlighted the relative underperformance here that we started to see in the Qs. The breakdown from this upper level range up here, which occurred a little over a week ago, and the fact that we fell back below February. That was our first sort of warning sign here for the Qs. Now, at that point, it was still a fairly innocent pullback and not a whole lot to worry about in terms of general market structure. The selling, though, has continued since that point. So we saw essentially a very violent Monday, a start to this week, where we saw the Qs down 2.5%. And then yesterday's action, which ended up closing the day in the green. So yesterday gave a little bit of promise here where the morning was open. The morning was ugly. We opened the session kind of feeling like some capitulation where we were running stops, we were breaking through structure, we were gapping down, and that was where we saw some capitulation, and then we got the nice close in here. This is a great single bar to mark a potential bottom. The problem is you need to then hold that bar. You need follow through. You need to then add sort of structure and progress to it. And today we got the exact opposite. We just had another sort of violent gap down right back down to these lows. And as at the time of recording this, we are intraday during market hours. We do see that we are trading underneath yesterday's lows. So in the very, very short term, what we want to see for added confidence in this market right now is to get back over yesterday's lows, to close where we either opened on yesterday's session and the low is basically the same price. We just want to see, let's call it 320 for round numbers. We want to see the Qs back over, closing over 320 to give us more confidence in the short term in this area of the market. That's what I personally would like to see. So that's a level to pay attention to. That's something we can keep an eye on into the close of today's action. Now, if we zoom out a little bit further, we look at just the selling that has taken place here. We look at this overall price structure. We have broken down again from the recent highs. We've broken some near-term trends and some structure. So when I look at this picture here, it seems like a retest of this March low structure, or at least this 310 area, makes a whole lot of sense because we're already sort of breaking everything in between. We filled some gaps in here. And again, if we can't actually get a close back over yesterday's lows or opening price, then I wouldn't be too surprised to see us test this maybe even later this week to see if buyers are going to show back up where they showed up in February and March. This pattern's a little loose right now. The volatility has widened up. Volume hasn't gone too crazy yet. So when we look at volume on a relative basis, though, I mean, look at the volume that came in here in March. I mean, we saw, 132 million shares in the Qs trade on March 4th. We only got, even yesterday was a pretty loud day in terms of market movement. It was only a 70 million volume day. Granted, that is above average, but still nowhere near some of the levels that we saw just 2 months ago which ended up being a good washout. So let's pay attention to the volume levels. Let's see how we close out the session here. And if we can put in a higher low over this 310, beautiful, then maybe we can, start to build on top of that. But if we are continuing to sort of slide here and see some trouble, I wouldn't be surprised to see us back down at that area. So with that in mind, that is the cues. That is the isolation point of weakness right now. And that's something you have to keep in mind, because when we look at some other sectors, take a look at energy, for instance. This is the energy sector, XLE. It looks totally different. It looks like it is completely unfazed, and it is just, trending along its merry way in an overall uptrend. Certainly it's stumbling here around this prior high in March, but generally speaking, you're not seeing volatility, go wild here. You're not seeing the sell-off. You're seeing a perfectly complacent sort of uptrend in energy. Let's take a look at materials. Materials, same thing for the most part. I mean, we're getting a little bit of a pullback today. We saw some rejection here on Monday, but when we look at this trend, I mean, it is very firmly up and to the right here without any prior structure, breaking down or breaking trend. We can look at financials and we can see, again, pretty much the same thing. So sectors, when we're thinking about trade ideas, are very important to keep an eye on. I mean, it's something that we spend some time doing in our weekly videos to try and keep us on the right side of the market. So this is where the strength and resilience is. And when we look at things like technology, right, this looks like the cues that we just looked at, much more of a sloppy sort of chart. And if we look at things like biotech, right, this is looking like it's trying to bottom out here, but looking a much different where it is, well off of the highs versus the energy, materials, financial space. So that's one high level thing to keep in mind. Now, let's say, and most of us like to trade the technology names. So what to do in this point is to look for those stocks that are still holding up, that are still showing some relative strength, that look good from a longer term perspective. So let's take a look at Google here. Google in the short term looks a little rough, but let's throw this on a weekly chart and you can see again, okay, we've got a nice uptrend here. So we've got tech, we've got an uptrend. This is definitely a leader in this space. This is an idea where you can look to see, okay, maybe I've been, maybe I missed the last, piece of this run in Google. And so maybe, a retest back here of this April breakout is where we can expect this to go. Maybe we can look for some opportunity down here in the lower to mid 2100s for Google. That gives you a strong stock in a weak sector, in a sector that is getting beaten up right now, but it is the leadership in that space. So if you believe in rotation, if you believe we're, getting close, if you believe in sort of the 310 retest here of Qs kind of washing things out or undercutting 310, then Google as the leader in that space might be a name you could keep on your watch list. You could do the same thing with a name like Seagen, SGEN, which is really in the biotech space. And again, we looked at XBI, that's been a pretty poor performer. But if we look here at, say, a weekly chart, the structure here looks a little bit different, right? This looks like it's actually trying to hold up. There's some reasonable structure in here, and you can see it's trading just underneath these old 2020 lows here, and it's going sideways. And you can look at this and say, okay, well, I don't love the sector, but this is definitely one that's holding up. It's a little more resilient. The structure is a little more tight. So if this can start breaking over 147, these are the areas, these are the stocks I can look at. You can go right down the list to something like a Facebook, which is similar to Google in the sense of it's kind of the leader in its bad sector right now. If we look at a weekly chart, this recently broke out in April, and so it broke out and it's basically getting that retest right now around this 295-300 level. So Facebook here I think is interesting. This is where you want to pay attention to it for support, to see if buyers step in to defend this prior breakout and the prior push through that price level. Last but not least, you can look at something like an Amazon, which again is totally in a sell-off immediate mode, but there's structure underneath it. It's not totally, getting lost and breaking longer-term trends. It's still just kind of coming back to its old sort of sideways range here. Full disclosure, I still have a position in Amazon myself, so we are long this stock, or this is not really with any of our trading systems. This is with my personal account. So Amazon, this is something I'm long, and it's still just kind of moving sideways here. It's been dead money for the past, year. And so that hasn't changed, which is, neither good nor bad at this point. We're just still in wait and see mode. So hopefully that makes sense. I mean, that's some, broadening out the tech side, because I know a lot of traders love to focus on technology almost exclusively. And that is a way to kind of frame things out. Qs in the short term look pretty lousy, but if we look at those longer term levels, you can start to plan and look at some stocks that are still looking decent on those longer term time frames. You can also, so if we look at something like AZPN, so this was hitting one of our stock scans today, which was our strong close high volume on the weekly. So if we look at something like this, I have no idea about this stock at all. So there's been a lot of movement here recently, so I don't know the story behind this. But certainly, you look at something like this, another way to play things, and to certainly say, look, there's extreme relative strength going on in this particular name, AZPN, putting in extremely heavy volume. This is a weekly chart. We're bullish engulfing the prior week, and we're right now trading at the top end of it. We're up 10% this week. So this is totally trading in its own world right now. So this is something where, okay, you look back down at a daily chart. You may not want to be chasing it here, but it's something you'll add to your watch list and look to see if it sets up for something a little bit tighter later on. So that's it. I mean, I think that's kind of the high level thoughts I wanted to just sort of ramble off today. I think it's an important day to just sort of take notice, take inventory of what you're looking at, what stocks you own right now. Keep an eye on those sectors that are doing well, that are still in sell-off mode. And the VIX, like we talk about on our analysis videos here, the VIX is now into the 20s here. So this is a change of characters. This is something where you want to just pay attention to. We might very well be at the, in the 8th inning right now, and we're about to wash out and return to normal, but we might not, right? And so, betting against momentum is a tough thing. So I would be cautious here. So long as the VIX is closing over and into the 20s, you have to be on a more conservative path, because you just might get the VIX that squeezes all the way up to 30, 40, and you get a real nasty sort of downdraft in the market. So pay attention to the VIX. It's telling you almost everything you need to know right now. And you can always look at the Nasdaq volatility, which is actually over 30, right? So if we look at the VIX made for the Nasdaq, basically, it's tracking the Nasdaq Qs, you can see this is over in the 30s. So a much, again, different story and more sort of warning signs being alarmed right now. So hopefully that makes sense. Hopefully you guys and gals are doing well out there navigating this volatility. Leave a comment below. Let me know what you are looking at and what you are thinking about. Are you looking to add positions here? Are you more on the defensive side? We didn't talk about any types of shorts, but certainly that is what has been working these past few days in, again, specific areas, in the tech side, in the high beta growth side. So that's it for me. Every Wednesday, trade ideas just like this. So be sure to subscribe to our channel. Check us out on thetraderisk.com. You can always find the videos there. Have a great rest of your day. We'll see you back here on Friday for our long form market analysis, where we'll go a lot more in depth into everything that you see here.